Okay, we're here with just like to invite thank you all for coming to our webinar today, our lunch hour, as we discuss trade trends post-Brexit in the UK. Today with me we have Emily Fry from the Resolution Foundation, Julian Jessop from the Institute of Economic Affairs, and Sam Lowe from Flint Global. We're very glad to have all three of these trade experts with us today as we discuss and talk about what has happened to trade in the UK, where it's going, and some of the current events that as they unfold and what we think about those. To start off, we're going to start with Emily Fry and just get a little bit into, Emily, you've been doing a lot with services and goods and comparing kind of what look like. So we obviously want you'd also to kind of just start with discussing what are kind of these general trends that we're seeing with trade. And before we do that, I do want to just mention for those that are on, make sure to send your questions via Slido, and we will address those during this time. And so with that, Emily.
Thanks, Stephen, and it's great to be here. So as Stephen mentioned, I'm Emily Fry. I'm an economist at the Resolution Foundation, and we've been looking at, now we have 2 years of data following the TCA implementation, so the new free trade agreement with Europe, which was implemented in January of 2021. What is happening to trade? And so why is it important? Well, first, trade openness is a way that we can look at measuring kind of the more direct impacts of the new trading relationship with the EU. So it's an important metric that we can measure what those barriers are doing. And also for a place like the UK, we're a medium-sized open economy, and everyone will agree that trade is really important for us to maintain our current living standards. So firstly, looking at kind of our recent deep dive on what's been happening to post-Brexit trade. So is this part of the consensus that before Brexit happened that would make the UK less open and less competitive? And so we've been really looking at that question. And so we found that although the UK experienced one of the biggest deteriorations in the G7 in 2021, the UK actually saw a partial recovery in 2022. But if you looked a little bit under that data, we saw that for goods, that was actually inflated by a lot of precious metal trade, which is very specific to the UK, also Switzerland, where we are the center for gold markets. So we see a lot higher kind of precious metal trade. So when we strip out that, the UK's goods export growth looks to be kind of the worst in the G7 since the TCA was implemented, and you can see quite a sharp drop off, as you would expect, following the kind of implementation of those customs barriers that have come into play. We've also seen kind of imports of both goods and services are behaving essentially as the consensus expected before Brexit happened. So they are performing kind of the worst in the G7 at the moment. But there are two kind of major puzzles that we are continuing to see in the trade data, and we think that they're kind of really interesting trends that warrant kind of further exploration and further discussion. And they don't alone kind of disprove that consensus view. So first up, so services. So the UK is the second biggest services exporter in the world. We have a very specialized services economy, and you can see that actually we have been very resilient for our services exports since the TCA was implemented. So they've benefited enormously from the pandemic recovery, which is obviously kind of at the same time as a lot of the Brexit data is happening. So there's a really difficult causes to pick out there. But what you can see is that the UK is leveraging the tailwind in the growth of the key sectors that the UK is really good at. We're very good at other business services. We're very good at finance and insurance. We're very good at cultural services as well. And we have been actually gaining market share overall in those key sectors. So the UK has, been performing much better than expected in services. That said, the last 2 quarters for services haven't been quite as strong, and we're now looking a little bit more ordinary in the G7 pact, but by no means are we seeing a similar thing as what is happening for goods. The other puzzle that we're left with is the EU intensity of UK trade. So one of the key areas that we had anticipated was that, we have these new barriers with the EU, therefore you would expect the UK to be trading with other countries around the world as opposed to the EU, and to see that kind of relative decline in EU trade. And that hasn't really materialized in the last couple of years following the TCA. One argument could be that Brexit hasn't impacted trade as much, although we can see that the overall levels of trade have certainly appeared to be affected by those new barriers. Another reason could be some of the complexity of the supply chain. So if you're importing a part of a car from Germany and then re-exporting it back into Europe, then those contracts are really long-term. They're based on really long-term relationships. So that might not be as affected as quickly by some of those, some of the new kind of trading relationship. But kind of, as I mentioned, we are going to continue to monitor these developments as they continue to evolve. And we do expect to see, as we gain kind of more data, we do expect to see kind of these trends to continue to evolve. But the key thing that the UK's strength in services does continue to be kind of showing through.
Great, thank you so much, Emily. So we're just gonna move in from there, and Julian, very similar question to you. What is kind of your interpretation? What have you seen from trade data in the last 2 years?
Well, I thought actually I'd start with something that I think we can almost all agree on, which is that if you increase barriers to trade, there will be less trade done. So I think it'd be very surprising if Brexit, at least to begin with, hadn't initially had some negative impact on the amount of trade that we do. Independently of the data, you can of course pick that up from talking to almost any business or looking at any business survey. They have found trade with the EU more difficult, and some smaller firms have actually stopped doing it altogether. So I think there is clearly going to be some negative impact on trade from what we've seen so far. I think we could also all agree that that's a bad thing. So it would be very odd for any free market economist to argue that an increase in trade barriers is anything other than bad for growth and bad for prosperity. And in my view, that applies both to exports and also to imports. So that the fact that we're importing less is potentially bad for the economy as well. So I think those are the broad points of agreement, at least amongst what I call sensible economists on all sides of the debate. But there would probably be 3 areas where I would disagree with the consensus, if you like. One is about the strength of the evidence of a big effect on trade. I mean, Emily's already touched on some of the uncertainties here, the impact of COVID. I'd add the energy crisis to that as well. There are still question marks about the quality of the data. I acknowledge that the Bank of England has tried to adjust for that and suggest the numbers are actually worse rather than better, but that is uncertain. If you look below the headlines, there are a number of things that are still puzzles. One of these Emily's already mentioned, which is that our trade with the rest of the world seems to have been hit just as much as our trade with the EU, which suggests there might be something else going on apart from Brexit. It's also worth noting that our imports from the EU seem to have been hit to a similar degree as our exports to the EU. Which doesn't necessarily make sense because at this stage the UK hasn't imposed the full import barriers that it's planning to do. And there might be some other potential factors as well. So, for example, sectoral differences. The sorts of things that we export might be things that have been hit particularly hard by COVID or by external factors. So the problems in the auto sector because of the shortages of semiconductors being a good example of that. So I'm not convinced that the evidence of a big hit to trade is actually that strong. My second point is about how permanent that hit is going to be. The sort of consensus is that it's only going to get worse, and admittedly it might do if the UK presses ahead with the new barriers to imports from the EU, that it's still promising. But there is some signs that exports and imports are recovering a bit, which sort of makes sense as businesses become used to the new arrangements. There's scope for small improvements in the trade and cooperation agreement, so we could get a better trade deal in future than we've got now. Technological advances as well, making it easier to deal with the paperwork. So there are some ways in which the initial costs of Brexit in terms of the hit to trade with the EU could diminish over time rather than increase. And then the final point is just about the big picture macroeconomics of this. And in particular, you might be aware that the Office for Budget Responsibility has suggested that the level of productivity in the UK, so that's sort of GDP per person, might end up 4% lower than it would otherwise have been. And that is primarily as a result of some strong assumptions they're making about the hit to the trade intensity of the UK, but also the knock-on effect of that on productivity. And I think both of those parts of the chain are questionable, in particular the impact on productivity, because the reality is that the UK will remain a relatively open economy. And there are some potential ways in which there could be offsetting boosts to productivity for the other aspects of Brexit. It isn't just about trade. There are other things that are going on as well. So I agree with the consensus insofar as, yes, it's inevitable if you raise trade barriers, there will be less trade. But I don't think the effect is that might be attributed purely to Brexit is as big as people suggest. I think some of it will be temporary. And also the knock-on effects on the economy, the wider economy, may not be as substantial as some people suggest either.
Perfect. Thank you so much. Yeah, thank you, Julian. And so we'll just move right in there to Sam and just kind of hear from you on that same question of what are the trends that you've seen post-Brexit with trade, and how has that just kind of played out?
Thank you. And I think maybe I'll just start by focusing in on this difficulty, this challenge, which is sort of quantifying the impact on trade. And I mean, you could take this larger and say even quantifying the impact of Brexit on the economy post hoc. And there's quite a few reasons this is quite challenging. So I'm of the camp that agrees with Julian's opening statement. If you raise barriers to trade, then you probably are going to have an impact on trade. And then in terms of so the interesting question is then to what extent has it actually materially impacted trade? But the reason it's challenging to give anything more than a sort of best guess on this is, in the first instance, compared to what? So if you're comparing trade before and after exiting the transition period or the implementation of the trade and cooperation agreement, well, you actually instantly come up against some of the issues that Julian's mentioned, particularly around data quality, whereby actually the measurement of trade within the EU, which is based on dispatches, VAT returns and the like, is really bad. It's just not that great. And then actually on day one, we decided to change our methodology for calculating this as well. So you end up with this thing where you end up having to make adjustments, which is, as Julian mentioned, the Bank of England has tried to do, to try and account for the fact that you're not actually measuring apples and apples. You're measuring apples and, I don't know, something close to an apple, but not quite. Maybe not a pear, but it's a different coloured apple or something. So you're instantly going, okay. But then you have to ask yourself, well, how much does before and after tell us? Because actually what that will tell you is whether there's been an immediate shock. And if for some reason trade never recovered to the sort of levels it was before, then you could deduce from that there's been some sort of permanent disastrous hit. But actually, in all likelihood, trade is going to keep going up, at least in value terms, if you can just because of inflation. But just generally populations grow and it's going to keep going up. And so actually what you're measuring, the question you're asking yourself is trade higher or lower now than it would have been had we taken a different route, or had we remained in the EU, or had we had a different relationship? And the problem you have with that discussion is that you're instantly talking about a counterfactual, a multiverse of possibilities that you can never fully experience. You can't know. You end up having to create statistical models to say, well, okay, so this is what I think trade would have looked like had we remained in the EU or had a deeper relationship, and we'll compare that to what we actually can observe and work out the difference. And of course, there are ways of doing this, but it's all a bit unsatisfactory, which means that this conversation the one we're having today is the one that I like to have, I suppose, is what I'm saying, where you sort of accept the premise. There's lots of evidence to suggest that raising tariff barriers hits trade, and then it's really a question about trying to pull out. So what exactly is attributable to Brexit? What's attributable to other things? I would say in terms of impact, I'm in the middle sort of camp. So in terms of overall impact of Brexit, I'm in the sort of 2 to 3% camp in terms of impact on GDP, and in terms of trade, relatively significant. But then I get very interested in the sort of things you didn't expect. So the point made about the fact that UK imports have tailed off more quick from the EU, have tailed off more quickly than exports to the EU, and that's not intuitive when you look at the actual model that's been imposed on the border, insofar as the barriers on the EU side for goods largely went up on day one, and on day one the UK introduced some but has been phasing in over time. But it then gets to interesting questions, because you go, why is that? And some of that, this is speculation on my part, some of it might be dependency, as in the UK exporters that carry at least the value figures, so we're talking about heavy industry and the like, don't have as many options or alternatives, so they have to keep selling to their suppliers in the EU, even if it means that they take lower profit or whatever, and perhaps the exporters on the EU side have alternatives. Maybe, I don't know that. This is sort of speculation. The other thing that I think is interesting is in terms of where the impact has fallen sectorally, and in terms of the sectors most badly hit, in terms of their aggregate contribution to sort of trade data or economic data, it's really small. So if we think about the food sector, so I think all surveys, all sector-specific work done shows that there's been a huge impact on UK exports of food in general, but specific types of foods. If you think about shellfish, if you think about fresh fruit, anything sort of perishable, you can sort of see that impact there. But obviously, that's important, and it has a big impact on those specific firms. But in terms of the aggregate data, that's not very big, right? So there's that issue there. I then think services, again, interesting question. What's going on here? I think some of it's inflation. Some of it is the COVID, post-COVID, and then post sort of other things, demand for the sort of services that the UK has. But some of it is also that there's potentially a question of whether those barriers were imposed on the EU side immediately. So if we think about banking and the financial sector, on day one of post-transition, most banks will have, they had to have their subsidiary in the EU, but they're still actually quite allowed to do quite a lot of activity from London at the permission of the, say, BaFin in Germany, domestic regulator. So the last year or so, the ECB has done this desk mapping exercise, and it's starting to put lots more pressure on the banks to reallocate not just, say, their sales functions, but also the trading functions. There's been pressure put on, say, the back-to-back booking model, which is where people offset their risk in London. There's concerns still about, say, delegation, the asset management space, where asset managers have set up the fund in Luxembourg but still run them out of London. These aren't necessarily ever going to happen. This pressure might never tell, because for other reasons, they decide they can't actually force the activity to move, or if we've seen it in, say, clearing, where actually that's very difficult to extract from the UK because there's nowhere to put it in. So, but there is this question about whether it could tighten further. But then that could still just be completely offset by booming trade in the unregulated sectors. So if you think of the other business services category, which was mentioned, some of that is regulated, and by which I mean there's, you need different qualifications, so engineering and the like, or bits of audit. But say management consultancy, the sort of stuff I do. Actually, the biggest barrier to me selling into Europe is if I have to go and pitch for business and get paid personally, which I don't do because I'm part of a company, right? So actually, me providing it virtually over Zoom, there's no barriers. There might be issues if I were to go and do that in person, depending on the member state, that you might have to work out and is tripping some people up. But then there's also an enforcement question. Is that being enforced? And then on services, just in general, you get to the issue, which is that the data is horrible. It's useful for pointing to sort of directional change, but in terms of actual specific levels, it's not that great. It's not that useful. So I suppose what I'm trying to say here is that there's been a hit. I think it's fairly significant, but actually you can have perfectly valid discussions about these levels, because nearly everything, all of the inputs are slightly flawed, and there are so many policy question marks lingering that it at least creates interesting discussions such as the one we're having today.
Perfect. Thank you. And that seems to be one of the big difficulties here is as we look at the trade data, just being able to assess the accuracy of it, being able to assess, what those levels are, as there's different methodology, metrics, and collection and everything. And as we try to figure that out, I think that raises a lot of questions, and we've talked a little bit about this already, but how do we kind of then assess where the UK is at, how it's been able to grow, or where we've seen shrinking going on? And I guess that kind of comes to what are some of the things that have been done where we've seen maybe divergence with the EU that can kind of give us a little bit more of a feel as far as like how the UK has been able to adapt. And so I want to kind of move that into and ask, one of the biggest things that is talked about with free trade a lot of the time is free trade agreements. And the news of the UK joining the CPTPP, which for our audience that's not familiar with that, I mean, it's a very, very long acronym, but pretty much this is the Trans-Pacific Partnership with 11 other countries that allowed for more open trade, especially with those in the Asia region. And the UK was the first country to join this, apart from the original members. And so to our panel here, when we look at the free trade agreements, both that of joining the CPTPP, as well as free trade agreements with Australia and New Zealand, and even the potential for new ones with India, how do we judge, or how do we gauge how important those are when we're in these conversations? It's quite difficult, I think, to sometimes assess, like, is this something that we're building up? Is it hard to assess just one? Who would like to maybe talk about that first, and just thoughts on Sam? I see your hand.
Well, it's just because it's sort of a favorite subject of mine to a degree, but I think so when assessing the impact of, say, the free trade agreements the UK has done post-Brexit, in the first instance, you have to accept that sort of the actual big achievement in the first instance was replicating the existing EU ones, in the case of Japan extending slightly, which not everyone agreed was possible. I actually was in the camp that said it was, given the correct time horizons. But so that was important in terms of sort of standing still. And then if you look at the new trade agreements that have been done, so if you start with Australia and New Zealand, I think what you'll see there is that there will be some sectoral impacts over time, but largely because we're talking about relatively small, already open economies that are very far away, that we already trade with more than you would expect, given sort of gravity type models, because of cultural ties. If you think that even on the services side, because so many Brits go to Australia, sort of tourism is pretty high, so you've got good transport service. Like, it's quite good economic relations already. So the actual marginal upside there, or available upside that wasn't already being realised at the aggregate level, is quite small. CPTPP is slightly different in this, in that if you were coming to CPTPP cold, by which I mean the UK did not already have bilaterals with most of the partners, particularly Japan, then the upside, I think, would be quite a lot higher. However, because we do already have bilaterals with most of them, and Japan actually carries most of the economic benefit of CPTPP, if we're being honest at the moment. So what you're left with is Malaysia and Brunei. Whatever. Malaysia is interesting in that we're talking about an economy that we do have fairly high barriers to trade with now. And in terms of direct impact on day one, you'd say it's quite low, but over time, the fact, UK having some sort of first mover advantage relative to, say, the US and others, and even the EU, perhaps you could actually see that potential grow. The one I'm most interested in of these, in terms of ones that I think could make actually, in the long run, a significant impact, is India, in that actually the opportunity in terms of quantum of increased market access is relatively small compared to the others. If you're just comparing, say, we're not going to get down to zero tariffs on autos exported to India. We're not going to get down to zero on whiskey. However, as a relative proposition, we could get those tariffs down quite a lot, which means that UK firms are relatively much more competitive selling into India than American. or EU firms. And just because of the size of India's market and its trajectory over time, it's one of those where you think having that, whilst when they do the modeling, the direct impact of India will still be small, but you wonder in terms of the sort of intangible impact of investment decisions and longer term, if it actually could be quite a lot bigger if we get in before most others. I mean, Australia has a sort of tiny agreement with them, a few others do, but you know, before the EU, before the US, that sort of question. I think that could be, you know, potentially something. But I mean, the challenge here is that if you're looking for trade agreements to offset, at least in my view, the entire sort of economic losses, trade losses of Brexit, you know, you're just not going to be satisfied. And part of the reason for this is that most of the countries we've discussed so far already are fairly open, except in low value sectors, really, like agriculture, for industrial good. And then in terms of the actual trade agreement model, they don't, it's difficult to describe what they do for services. So they do have benefits for services. They lock in existing levels of access for the most part, but because of the nature of services trade, quite difficult to unlock new market access absent some sort of equivalence or mutual recognition or harmonization. And most just don't go there. So I think trade agreements are part of the post-Brexit economic puzzle, and they do make a contribution, but you need more. Actually, in terms of the economy, there's other things you can do. I don't know. The one that always gets pulled out of the hat by both sort of Leave and Remain voters is always reform the planning system, right? You know, that would probably have a much bigger impact on the UK economy than these individual trade agreements. But it doesn't mean they're not important.
Can I just jump in on the services side of things in particular? And Sam, I think you made a great point that, you know, what are FTAs doing for trade? So if you look at kind of, again, using the TCA as a form of quite advanced, deep FTA that you could do, goods, as we mentioned earlier, goods exports are down about 10-11% since kind of 2018, whereas services have actually grown by about 1%. They were doing even better last year. And if you look globally, the size of of services imports as a whole have grown by 3 times since 2005, whereas goods imports have grown by 2 times. So services are increasingly becoming a larger part of our kind of import-export trade system, which is quite interesting given that FTAs aren't necessarily focused on liberalizing services in particular. And so that raises some interesting questions as to there are some kind of marginal improvements that are happening in some free trade agreements, focusing on things like data, which matters if you are a management consultant operating where you are, Sam, and where you need to host that data, whether you need to host it in the country that you're kind of trading with, whether they recognize, if you're a lawyer qualified in the UK, whether the country you're trading with recognizes that qualification, or, for example, whether the country that you're trading with needs you to set up an office in the country that you are trading with, which are all really important, and whether you can actually travel to a country and do business in the way that you want to do business in that country, are all really important parts of being a services trader. And that applies to both whether you are kind of this regulated side of things, like Sam mentioned, but also if you're a not massively regulated sector, it is important that you can travel somewhere and do business there. So thinking about kind of these key things that aren't necessarily currently covered in free trade agreements, but it does feel like the UK has some scope right now to be a bit more innovative in how it thinks about particularly including these important types of services trade in trade agreements going forward.
Well, 3 quick points then from me. I agree with, I think, everything that Sam and Emily have just said. One thing, first of all, the so-called gravity model, just a quick explainer on that. For those people not familiar with it, it's sort of an idea borrowed, if you like, from astrophysics, the idea that the gravitational pull of 2 planets depends on 2 things. One is the distance between them, and the other is their size or relative size. So the idea of a gravity model in trade is that you tend to do more trade with countries that are either bigger or closer, or some combination of the two. And that's sort of a nice, neat idea. I'm a little bit skeptical, though, that it's the whole story. There seem to be various reasons why distance is becoming a little less important as goods have got smaller and we've got better at shipping them around the world. And distance is less important for services than it is for goods. It is still important, but it's perhaps less important than just the old-fashioned sort of trade we're used to do. The other important part of the gravity model, though, of course, is not just distance but size. And I think most people accept that Europe is going to be a relatively slow-growing part of the world for the foreseeable future, and most of the growth is going to come from the emerging world, where even as members of the EU, we didn't have very deep or meaningful trade agreements. So I think there is a potential upside there for Brexit, for UK if we do go it alone. My second point, though, is actually a bit more negative. Of course, that assumes that the government of the day, whoever it may be, is willing to take these opportunities. Sam mentioned India as a good example. I think we could do a much better trade deal with India if we're more willing to be flexible on visas. And of course, that's the big topic of the moment. Are we willing to allow more Indian people to come here, work here, maybe bring their families here as well? I think there'll be quid pro quo in a trade agreement, and unfortunately the politics of that might get in the way. Similarly, we saw a lot of resistance to the trade deals that we are doing or have done with Australia and New Zealand, particularly from the agricultural lobby, very much putting the interests of producers ahead of those of consumers. And this is a general problem in public policy, that free trade tends to benefit everybody, but the costs, although they're smaller, are concentrated amongst a relatively small number of people who are very good at forming effective lobby groups and shouting "Save British farming" and so on. And then my third point is the question I'm often asked is it possible for lower trade barriers to the rest of the world to offset the increase in trade barriers that we've got with the UK? I think partly I'd question the premise behind that question, which is the assumption behind that question, which is that we have to have trade offsetting itself, whereas there might be other non-trade related aspects of Brexit that could still leave us ahead. So even if we lose out on trade, we could gain in other things, better migration policies, better regulation, and so on. Within the trade space specifically, though, I think it's going to be one of those things that's very hard to say. I mean, there have been people who've attempted to put numbers on the benefits of free trade deals with far-flung countries, and those numbers tend to be extremely small. But we know how difficult it is to measure the dynamic benefits of free trade deals, particularly when you take account of all the intangible effects as well, in terms of potential future flows of investment and everything else that is going on in a dynamic, changing economy. So I wouldn't actually be entirely confident that the benefits of free trade deals the rest of the world would offset the costs of more restrictions with trade with the EU. But I also don't think it's necessary for that to happen for the long run economic effects of Brexit to be a net positive.
Perfect, thank you. And just want to remind the audience to upvote questions on Slido that you want to see asked. We're going to actually move into some of those right now, and also kind of turn our focus a little bit to the EU and the UK's relationship with the EU. And we have a few things with that. One is that we have an upcoming change to the rules of origin that is going to be coming up at the end of this year, so the beginning of next year, that will potentially affect things such as the rules of origin being how much of a product needs to originate from that country in order to qualify for tariff-free either import or export. In this case, let's talk about like batteries. That question, one, what do we, Sam, I know this is one of your areas, but please everyone jump in on this, but talking a little bit about that, how likely is it that we're going to see an agreement with the UK and the EU to resolve this? And then in addition to that, going off a little bit of what one of these questions is that as we look at that from Slido, we're asking, would the panel's view be for the potential areas that the EU would be keen to put on the table for review when the TCA is looked at again? And so looking not just at rules of origin, but just in general, what are some of those areas that we feel like have potential to be, reviewed and discussed and improved? Yeah.
I start with rules of origin. I mean,
That
it
sounds
depends how
great.
much. It depends how much of the history you want on this issue, which I'm going to condense quite significantly. But this stems from how electric vehicles are made, and the fact that they're made quite differently from combustion engine cars, and the rules in terms of how the EU and the UK as a member approach setting the local content provisions, these rules of origin within its FTAs, which determine whether a product qualifies for tariff-free trade or not. You're essentially saying, is it British enough to qualify for tariff-free trade with, say, UK, Japan? That threshold, which is usually between 50 to 60%, in terms of that's how much of the value you have to create in either the UK or Japan in order to qualify for tariff-free trade, was set according to the production capabilities in regards to combustion engines. However, that 55% threshold just doesn't work for electric vehicles, because at the moment we import most of the batteries for electric vehicles from Asia. And in terms of the value of an electric vehicle, a large proportion of that is accounted for by the battery. So if you put a 55% local content threshold, rules of origin threshold, into the EU-UK Trade and Cooperation Agreement, you'd have this absurd situation in which combustion engine cars could trade tariff-free, but electric vehicles couldn't, because they wouldn't reach it. They wouldn't have enough local content. So what the EU and the UK did was acknowledge this problem and say, okay, what we're going to do on year 1, 2 is have a more accommodating threshold for electric vehicles. We're going to allow for more foreign content to account for the fact that as of now, we import lots of these batteries from Asia. However, we still have an industrial policy objective, which is to forcibly onshore a lot of the battery supply chain. So that's going to tighten over time. It's going to become more restrictive until the end game. So by 2027, it actually is more restrictive than the normal rules of origin, because it'll be a 55% local content threshold, and explicitly the battery has to be sourced in either the EU or the UK. But the problem we have is that we're about to go to the first tightening at the end of this year, when it becomes a bit more difficult, and you actually have to have sourced, in terms of the battery to be local, you have to have done a lot of the sort of lower bits of the supply chain, so created the active cathode material and the like locally. But industry hasn't kept up with this time frame. So if you actually talk to the auto industry, they're just saying, well, we can't source that amount of batteries from the UK or the EU. So what we need is to delay this threshold. It's like, okay, we can live with the fact that this is going to get more difficult over time, but let's delay it. And that's what the big discussion is at the moment. So there's all the news last week about how this was sort of really bad for the UK car industry and the like. The thing that's true, the thing that was missed was the EU car industry also wants this this threshold change to be pushed back slightly. In my view, it probably will be. But anyway, it's one of the sort of fun consequences of trying to do industrial policy via rules of origin requirements, and the sort of disconnect between sometimes what policymakers want and the speed they want things to go at, and what's actually possible from a business perspective.
Shall I come in next? Okay, thank you. Again, sorry, three points again for some reason. First of all, I think it's worth saying that the agreement we've got with the EU, the Trade and Cooperation Agreement, is actually a relatively good free trade deal. I mean, it's not, arguably as good as the agreement that we might have had if we remained a member of the European Union, though that did come along with a lot of other baggage in terms of rules and freedom of movement and so on. But it's actually a pretty good agreement, and I think it's arguably a lot better than the agreement that many people had factored in before Brexit, when they were predicting what the economic impact of Brexit would be. So the presumption that we get a typical free trade deal, whereas I think we've actually ended up with a rather better one. The second point, though, that doesn't mean it can't be renegotiated and improved. I know that there's sort of some shock horror when Keir Starmer, the Labour leader, suggested that he might want to renegotiate parts of the deal. I'm pragmatic about this. If there are aspects of it that can be improved, and we've already touched on the rules of origin requirement for electric batteries in vehicles and so on, then that's a perfectly reasonable win-win. As long as you don't go back on the basic principles of Brexit. And obviously there's a long debate about what Brexit actually means. But if you're taking back control of rules and borders and so on, and having the ability to do your own free trade deals, that pretty much means you have to leave both the single market and the customs union. So we couldn't revisit those, but I'm sure there are some small improvements that we can make on a continuing basis to the agreement that will be in the interests of both sides. And then my final point, what are the obvious areas for change? And rules of origin is one part of it. Another is more sort of mutual recognition of rules. There tends to be an assumption within the EU that unless your rules are exactly the same, then you can't have preferential access. But an alternative model is to recognize that your rules, even if they're not exactly the same, do end up having the same effect. So they are as good as, even if they are slightly different. So more flexibility on the EU side, and to some extent on the UK side, in terms of mutual recognition of rules, which would be good, both in terms of us potentially allowing less frictionful access to the European Union single market, but also not preventing us from doing free trade deals with other countries on slightly different terms.
Just to build on kind of Julian's last point, I think one of the key things that we've been thinking about with the free trade agreement, the TCA with Europe, is that essentially most of the tariffs are zero. So a free trade agreement will liberalize the tariffs, but there's also non-tariff barriers. And so a lot of the challenges that the UK faces when trading with the EU are related to these non-tariff barriers. And so for some things, they might just mean some kind of checks at the border to make sure you are importing what in fact you say you are importing, or you're exporting what in fact you say you're exporting, to check that maybe that the quality of the product or the size of the product is the right size for the European market, and therefore your wing mirror can fit on that European car, for example. But these additional kind of checks could diverge further depending on what happens to kind of the regulatory regimes of the UK and the EU going forward. So depending on kind of how that regulatory relationship, and it could be something about equivalence or mutual recognition, but thinking about where there could be divergence could cause kind of further challenges related to kind of the UK engaging with that larger EU market. And so there are a few kind of key areas that people are thinking about right now, but that's not going to go away. So key areas are things like this rules of origin, things like the CBAM that the EU is starting to implement from October. So there are these things coming up, but going forward, there could be these further areas for kind of regulatory divergence. And then on the services side, the kind of services barriers, the UK has recently been negotiating in quite a slow way a mutual recognition agreement with Switzerland for financial services. And so that's really the regulator talking to the regulator and saying, can we kind of trust each other's regulation? Are we doing similar types of activities that we know that there's stability in the financial systems, and therefore you can kind of liberalize services trade that way. So those types of kind of much slower, a little bit more boring, but could be potentially really valuable for the UK.
Could I just add just a list of things? So these are all things that, for the most part, I think fit Julian's criteria, although some might push a bit too close in a way he wouldn't want to go. But I mean, so things that you could potentially fix. Roaming, we managed to do that with the Norwegians. I don't know why we couldn't do that with the EU as well, if that's something you wanted to fix. In terms of the TCA, left open the possibility of linking the UK and EU's emissions trading systems. Were you to do that, you would also remove some of the potential challenges posed by the implementation of the EU's carbon border adjustment mechanism, which also has a Northern Irish dimension, which both the EU and the UK like to avoid talking about as a potential issue, but it's very much there. You then on mutual recognition, if we go into specifics, you have the question about mutual recognition professional qualifications, whereby actually the next steps on that is following through with the commitment of the TCA and placing pressure on the individual qualification bodies to recognise respective qualifications is not necessarily something that can be done centrally, given that qualifications are often, not even granted by governments. They're granted by arm's length bodies, so it's actually fairly complicated to do, but possible. You could also, if you really had ambition, upgrade it again, similar to the UK-Norway agreement, whereby you sort of reverse the burden of proof, where you say, well, the qualification is recognised unless you have a really good reason not to, or there's a specific reason why you think you might need to do an additional test. I don't think that would happen, but it's possible. You also have mutual recognition of conformity assessment bodies. This is something the EU has done with numerous other countries, New Zealand, Australia, the US, absent a free trade agreement, which allows for products to be tested at certification bodies located outside the EU's territory to ensure that those products meet EU standards. This isn't about the mutual recognition of standards, it's just the ability of a foreign-based entity to perform the adequate tests. The EU didn't want to do this with the UK because it didn't want to risk offshoring its testing industry, but perhaps the dynamics of that have changed, given there's been a bit of a lag between the end of the TCA and now, and maybe those fears aren't as acute as they were before. If you're getting really ambitious, financial services equivalence, that's still a unilateral decision the EU could make that doesn't require anything in terms of regulatory harmonisation. It exists now for clearinghouses, but could it be extended? I think probably not, in terms of the politics of it aren't there. But if we're talking about could it be possible without, I think, breaching, I don't think I've breached any of Julian's conditions yet. I think where I would is that I think you could do a deeper veterinary agreement. And my personal view is that doesn't act. What CPTPP Australia and New Zealand revealed is that you can do deals with the rest of the world whilst maintaining the EU's SPS regime. That's actually what it's demonstrated, because we haven't diverged yet. So if you are comfortable with that, why not lock yourself in and just remove all of this issue for UK food and drink exporters? That's where I think I've crossed Julian's line, but there are degrees of that. You don't necessarily need to go the full way.
Julian, did you want to respond to that, or?
No, I would just say, I'm pragmatic about this. If there's a sensible set of rules that happen to be the same, I've got no problem agreeing to them. So that the problem arises when the rules are determined by the other party with us having no say in them. I think that is the Brexit red line. But if there's a perfectly sensible set of phytosanitary rules or whatever in the regulatory space for the veterinary trade, then absolutely fine.
Well, let's look now a little bit to the future and what trade is going to kind of hold with that. And so I'm going to combine a few questions that we have here on Slido that look into a upcoming general election. And so one with this is I want to start with both looking at asking here is somebody asked, how much does trade actually matter to politics? Like, how much is improving trade going to help in a general election? And so a little bit of a maybe cynical view there if that really does anything, but let's that and then kind of moving into is what are the impacts that both either a new Labour or a Conservative government would have, or what would be their pitches in like leading up to an election with trade that would help kind of sell their point, that they're going to do something different, they're going to make the best out of Brexit for trade. Yeah, anyone want to start on that?
I'll have a first go. The politics of this is clearly tricky. I'm sure there are many people, actually in all of the major parties, who would want to revisit the decision to vote to leave the European Union. But I think politically it's not realistic to put that on the table. There are, though, several ways in which the arrangements we already have with the EU could be improved, and we've touched upon those. And then there's a big debate about what you do with the Brexit freedoms that you have. How far do you go in doing new free trade deals with the rest of the world? To what extent do you deregulate the economy, or do you make the regulation better and even tighter? Huge big discussions about things like state aid. is Brexit actually an opportunity to increase the amount of state aid that you provide to your domestic industries? As a free marketeer, I hope that it isn't, but that's the sort of debate that could form part of the election campaign. But I don't think either of the major parties, Conservatives or Labour, will be arguing that we need to have another referendum and rejoin the European Union anytime soon. You're right to say it does all this stuff about trade cut through. I don't think it really does. I mean, I think the sort of negative headlines about the impact on trade certainly contribute to the general sense that Brexit has been an economic catastrophe. I think that narrative is completely exaggerated, but it's impossible to pick up certain newspapers or turn on certain broadcasters and not see a negative Brexit story from every single day, and trade often features as part of that. So I think it contributes to the general prevailing narrative of negativity about Brexit. But hopefully over time, if I'm right, and the costs in terms of the increased barriers to trade with the EU diminish over time, while at the same time more of the benefits of lower trade barriers with the rest of the world start to come through, then that narrative will start to shift as well.
In this conversation, we've been focusing a lot, I think, on the kind of production side of things. So how does trade affect kind of the industrial structure of the UK, what we're able to import, and therefore what we're able to export in terms of our industries. But the other, and importing can create productivity boost. Exporting is often done by kind of large productive firms, which can be good for growth, kind of the classic trade arguments. But on the other side is, of course, how trade affects consumption and how trade can affect prices. And so one of the recent things we've been seeing kind of in the trade data is that although, our food imports have been continuing to rise really quite rapidly, we're about 33% higher in our food imports than we were a couple of years ago. We're actually importing less food. So even though, and that is because the kind of prices of food have gone up so much globally. And we do know that food is one of the areas where we are still seeing kind of quite steep inflation. And obviously inflation is one of kind of the key areas where people are really feeling kind of the cost of living crisis. And so the relationship of kind of increasing trade barriers with somewhere where you are importing kind of 70% of your imports of food are coming from the EU. So there has been some initial work done on what have been the effects of kind of increasing trade barriers on the prices of things like food, which have shown some kind of Brexit-related effects. There was some work from LSE there. But I think that types of conversation, how kind of trade is affecting prices, is a really key one as well.
Sorry, just to come in on that, I think that's an excellent point for Emily, and I should have made it myself. I'm actually quite skeptical, as you can imagine, of some of these sort of attempts to model what the impact of Brexit has been on food price inflation in particular. But what Brexiteers can point to for now, at least, is that food price inflation in the UK and in the European Union has actually been pretty similar over the last several years. However, more recently, we've already started to see signs of food price inflation falling in the main European countries. If it doesn't also start to fall in the UK, then I think that's a sort of a gift to those supporting the case for rejoining, or at least renegotiating the agreement. So I'm very much hopeful that UK inflation will fall very sharply in the next few months. But if it doesn't, for whatever reason, I'm pretty confident that will be blamed on Brexit, and that will play an important part in the political debate as well.
I think this is an important discussion because in a way you've both made the distinction between the impact of trade policy on politics and the actual impact of trade, because I would argue that the actual impact of trade in terms of the UK's political debate has very recently played a huge impact. If we think about sort of inflation in the UK and the drivers of it, quite a lot of this has been imported. It's been because of supply shocks linked to the war in Ukraine, COVID, energy prices going up. And even if you think about, the recent changes in government, a lot of the focus of the press was about the domestic drivers of that. But actually, the main reason everything's bad in the UK right now has been that there's been a huge energy crisis, right? That was why. And that's an imported issue. That's a trade issue. We're talking about importing energy, or we're talking about, if not importing energy directly in some instances, but the issues, the second order impacts of constrained supply, and then you have greater demand for sort of the normal sources we go for, or whatever. But anyway, trade in terms of the economy, I think, has a big impact on policy. In terms of trade policy and its impact on politics, I think you do see it acutely at times. So one of the interesting things in this reactions following the Australia and New Zealand agreement, where the government took the decision essentially to prioritise getting it done over sort of haggling to the last on, say, individual tariff rate quotas for imported beef or the like, is that there has been sort of a political reversion to the mean, by which I mean we're a European country. Generally, we're a bit protectionist when it comes to agriculture, right? And we sort of shifted away from that for those agreements. We've sort of reverted to the mean because there has been a political backlash to that at the constituency level in certain bits of the UK, particularly where there are Lib Dem conservative marginals. And that has fed through to the concerned individual conservative MPs who have made that known centrally. So I think that's not going to be felt in every single bit of the UK, but in certain areas, that's a trade policy decision that could have sort of lingering electoral consequences. And I'm not making a sort of normative judgment here on whether what the government did was right or wrong. It's more just an observation of, every sort of action does have consequences, some intended, some not.
Perfect. Well, that's actually very close to our time. And so we're just gonna wrap this up. But I would like to thank Emily, Sam, and Julian so much for being here and having this great discussion. We'd just like to let our audience know we have some upcoming events as well that we'd like to advertise. So next Wednesday, we actually have an event with Mayor Tracy Brabin in Leeds. And so if you are in and around that area, please sign up for that event. It's going to be a great discussion. That's with our Unlocked series. And then in addition to that, we actually have our UK and Changing Europe annual conference coming up on June 7th. That's a Wednesday in about 2 weeks. That'll be a full day event. You can attend that in person. We'll also have that live on Slido and YouTube that you can watch in on. We're going to have some great speakers there as we just look at everything that we kind of reflect on as we say, the era-defying decisions to leave the European Union and what's happening there. So we're going to look at all the different aspects and discussions around that. And so with that, we just want to thank again our panelists and thank you also for all the questions. Sorry that we could not get to all of them. There was a lot of great ones, but we'll hope to have another discussion soon. As trade is very interesting, I think that's, as we said, it might not be relevant to all voters, but it does affect all voters. And I think that's the thing.
Trade is relevant to all voters. Trade policy might not be of interest to them.
Exactly. It is relevant to all voters. And we will continue to preach that. So great. We'd just like to thank everyone and have a great rest.